Good afternoon for Thursday, August 18, 2022. Welcome to my review of the day and profile of the E-mini S&Ps. So let's look at the daily chart. And yesterday we had stopped one-time framing. This is regular trading hour sessions, 9:30 Eastern till I use 4:15 Eastern for the close. And we had stopped one-time framing. We traded back in under this. The blue dotted line represents last week's regular trading hours high. So we're back in that range. And so we looked above and failed back into this potential range. And we did not see continuation to the downside yesterday. We actually closed back up near the high of last week. And then this morning we opened a little bit below yesterday's close. And the question is, are we going to continue down back inside this range? Are we going to stay within it? Or are we going to pop above again and fall back into it? And if so, are we going to come down into this day's range, so 3 days back? And if we are we going to trade to the other side of that range or some facsimile thereof? That was one possibility, right, coming into it. When we opened up inside range and inside value, which we did, I'll show you that here. So this red letter is the open, and this profile right here that's split out is the overnight trading. And then right here between this white line and this white line, that's yesterday's volume value area. So we opened inside range and inside value, and that gives us a couple ideas of what to expect and possible trading plays. Generally, when you open up inside range and inside value, it tends to be kind of choppy. So that was what we could expect. And then the idea is to, I think, okay, where do we want it to go to? How do we want it to get there to look for an opportunity? So I put together some things I'm going to talk about in a second. Ignore this green line. That shouldn't be there. So in the overnight session, we opened from yesterday's close, and in the Asian session, traded the Globex traded down, came up, then continued down into the European session. So we have a zigzag here, which tends to be a corrective type of a pattern. And then from the lows in the overnight, we one-time framed up. Almost you could say this might even be considered a separate profile. This is usually more useful in the daytime frame. And we had this move back up to the upside in consolidation, okay? And that's what we were coming into. We had a lot of back and forth into the morning. And remember, for the first an hour before the open, we had some of the news that was expected to come out this morning. And up until about, let's see, what was it? 10 a.m. with existing home sales. So we had some European stuff going on at 5 a.m., so that was already sort of baked in. And then we had continuing jobless claims at 8:30 and initial jobless claims at 8:30. And then Philadelphia Fed manufacturing survey at the same time. And then at 10 a.m. existing home sales. So 8:30 news had kind of shaken out. And then we're going to see, is there going to be any more fallout in the open? So when we did open up in range and in value here, we're looking for any kind of a directional move. We're going to kind of mark the tempo. What's it trading like? How's the price action to help us determine what we might do or what opportunities we might take. And in doing so, anticipating what could happen, I put together some framework for the day. So the first one, which would be the most obvious one, is we're going to open in range and in value. And then the strategy for this typically is going to be we're going to buy the value area low or sell the value area high. Now this all depends on the context. How does it get there? And what's it do once it gets there? And what's the broader market doing? What's the stock exchange doing? Which the S&P 500 is, based on lots of different stocks. So it pays to watch the market internals to see what the overall larger, broader market is doing. And in this case, it helps that the market tempo is very slow, which it tended to be. So let me split this out right here. Actually, I'm going to change this to a different chart. This is a little easier to see things. It's in ones, and I'm going to split right here, A period and B period. This would be our initial balance, which is the first hour trade. And Okay, again, remember we're looking at opening in range and in value. So that was the first idea. So the market traded up and then traded lower, and we tended to hang around here for a while. It was a lot of back and forth, and we didn't get to either one. We didn't get to the value area high. We didn't get to the value area low. Now, there were a few things that could have been traded off of. You had the volume POC from yesterday, and this is not right for some reason. This should be down here. Okay, I got a thing or two I need to fix. But the pivot point was here. The close was here. The overnight volume point of control was here. We didn't get up into that, and we didn't get down here either. Okay, for the first half an hour, it was a lot of back and forth. And if you sat on your hands, that's probably a good thing. Now, when B period opened up, I don't recall what happened first, but it did start. We did get a bit of a flurry of activity. It did uptick in far as tempo goes, and the opportunity that I was waiting for and looking for was to buy the value area low. Now, it's beautiful when it happens like this, but it doesn't happen like this as often as I wish it did. I'd already determined for myself that, okay, it doesn't look like larger players are really pushing the market around or anything today. There's not really any directional influence. So in that case, the shorter time frame traders, the smaller, weaker hands, are going to be pretty much trading off of references. The market becomes the visual references are a little bit more reliable. And anyway, the idea was to trade off the value area low to the long side in a responsive fashion. So responding to sellers drying up down here and buyers stepping in. So if you bought down here, which was the idea, remember, we're looking at buying the value area, opening inside range and value, which we did. We waited patiently until it got to the value area low, and we bought it. Now, we would have sold the value area high if it would have gone up there with the same conditions. The market internals were mixed, meaning they were slightly negative, but nothing major. There wasn't like a lot of clear direction in the market. The tempo was very slow. It was just churning a little bit back and forth, up, fits and starts, nothing major. It wasn't frenetic. And we built value inside the value area first. So we built value in here first, okay? And then if I merge these two together, see the profile of it, the volume point of control was up here at 71. It might have even been higher, I don't remember. But when we traded down below, we were getting away, and you can see the volume thinning out. We were getting away from the fairest price, right? You could argue it's 72 because that's the TPO or the volume point of control. The yellow is the time price opportunity, the point of control, and this is the volume point of control. So we could minimize our risk. You could have risked where it's 4 wide, 3 wide, somewhere down here. You could have risked maybe this under where this volume thins out. You could have risked the overnight low. I don't know that you'd want to risk this far down because that's a lot of risk with, we're really trying to take a piece out of this. We don't know how far it's going to retrace or bounce back up. We might get some responsive buying here and then find sellers again who push it back down and go for the overnight low. So this is one you want to keep your finger on the trigger. You want to just be, you don't want to get too greedy. And just take a nice piece out of the market as much as you can. If it starts to stall out, it depends on how you trade and how many lots you've got. If you've got runners and things, if it stalls out, conserve your emotional capital. You can always reload if it comes back down. You can always wait for another opportunity. You can take a break, and just you had a great trade. So this was trade number 1 to take. The next idea was to reject the prior day value area and take out the previous high of day. I have a scenario for taking out the low of the day, which I described as rejecting prior day's value area, taking out prior day's value area low, because that's where I'd want it to begin to go to the downside because now we're back inside that weekly trading range. And we might see a repeat of what happened yesterday when we went back and took out more of the range from hang on, from 2 days before, okay, from this day and this day, and there's still more back. So now it's 3 days before, and we're going to see if maybe we could get some more. Remember, we still have this poor low over here in the overnight at 49, so that's an outstanding thing to remember. That's still hanging out there. We had a poor low in the overnight right here, the KL. This is not a very good low. You can see where, just a moment. Now this is in ones, so I don't know what it looks like in the regular, but you know, sometimes like when I have it in ones and we got a poor low or and have some poor low, I'm counting that as a poor low, because there are some people, especially since the profile and ranges in the ES have gotten so extended, they look now what the NASDAQ used to look like, the NQ used to look like years ago, and you can call it a poor low. Let me see if I can, let's compare it to, just for curiosity's sake. Okay, so we have 2 ticks here in the, you can see we have 2 ticks. But I'm calling that, it's not a very good low, okay? So it's tantamount to a poor low. If you look at it in a little bit, if you want to call it a higher time frame, I'm looking at it in ones. It's not exactly a time frame thing, it's just, I'm you know, making the spacing a little different. There's more prices per TPO letter here, you know. So okay, all right, where was I? Yeah, I was talking about the next idea was to reject the prior day value area and take out the prior high of day. I could interchange value area high or high of day, or value area low and low of day. The same concept. Depends, I guess, where you want to get in. Maybe it was a little too early and I wasn't... when I got down here, I was thinking about something else as far as taking out the value area low. And anyway, let's move on. So the next thing was take out the prior high of day, and if the market internals support it, and the volume supports it, the tempo supports it, get in on it. So the market traded back up in C period, D period. Now, if you would have bought down here, you'd have bought the low of the day and hung into that. You'd have had to be in there for a couple hours, but you would have taken it quite a ride. I mean, that would have been a fantastic trade. And, excuse me, still didn't make it quite to the high of the day, the prior high of the day, right? In fact, it never did. And it got all the way up here. It didn't take out the overnight high, and then it traded all the way back down over the next hour, almost back to the value area low again, almost down to the lows. So we had a big swing, and this again is typical of you know, no net influence by larger time frame traders to extend it to you know, in a directional fashion, at least at this point in time. Now later on, we did get another move back up, but then it ended up closing back down in value. Not quite in yesterday's value, but still in range. We never took out the high of day, so you know, this was a neutral. No, I'm sorry. This was a normal variation day. Okay, a normal variation day is when the there is, you know, it's not a trend day. The initial balance. Let's see. I'm measuring that with this line here, and then you want to put the. Hang on a minute. You're measuring the range extension to that. A normal, I just eyeballed it. Normal variation day is going to be roughly half, or roughly the same length. Okay, and that's what we had here. So this is called a normal variation day. Let's see. So again, the prior high of day was way up here, right? So in fact, I might have had this backwards. I put the strategies take out. Reject prior day's value area, take out the prior high day. I probably should have used take out the value area high and then trade off of that, because that makes more sense. So we took out this value area high, and now we're looking for range. You know, we got some range extension. We're looking to hang long. So this could have worked here in CD for a trade, possibly expecting a move past the overnight high, or all the way up to the pivot or the high of day and beyond. It just didn't happen, and the tempo didn't support it. The market internals didn't support it either. But it doesn't mean there wasn't a trade here. I was gone by then. I did not take this, but that was the idea. So it actually came back in, and there are opportunities here. So we fell back into value, and you know, it could have been a good idea for a short here, but again, I was not here for that. But we didn't come back to the lows. We opened higher in H, and again, it made another attempt, and it started one-time framing up. Again, we took out the value area high, and so it's wash, rinse, repeat. So now we're looking at maybe the same thing again. Are we going back to the intraday value area high? I'm not sure where it was at that time, but that's where it is now at 86 quarter. And take it on up. And again, we never got to the highs, but this was one of the plans. I said take out PHOD, previous high day, but that was a little bit further up. I should have put value area high here, like I did down here, value area low. Okay, so all right, well, that worked. I was not a part of that. The other story was re-enter range 3 days back and trade the other side of range. I had this, I was messing around trying to adjust some of these cells on this worksheet, and I kind of got mixed up here. So I have, not that these are any necessarily priority order, however, I do usually put the most obvious one and the one where we currently are as the first one, okay? But the fourth one, and again, these have nothing to do what's most likely to happen exactly, okay? But I really would have been nice to have these two together. So when you're opening in range and value, you almost have basically the opposite scenario. It could go one way or the other, and depending on which way you go, you could reverse the concept. Okay, but this was sort of the same thing. Reject prior day's value area, so we take out prior day's value area low, which would have been down here. Okay, where pretty much, let me merge these back together. So I'm going to get confused, and that's the overnight low. Where we stopped, well, that never happened. So it was kind of, wasn't planning this, but it's kind of good this was the last on the list. But because we never took this one out, we never had the opportunity for story number 3. So really, the trade of the day would have been to buy the value area low and hang on to it. But again, the tempo is slow. That's very difficult to do unless you're going to be there for a couple hours, watching your screen, monitoring it, and you have more than, you need to be taking off some. If you're going to try to hit a one-hitter from down here and ride this all the way up, good luck, because that's just a lot of uncertainty. Lots of things can happen. There's so much back and forth. I mean, it's grueling. That's brutal. Because every time, unless you're completely a robot and have no emotions, and if you're sitting there watching this, coming up, you're getting this much out of it, then it comes all the way back down here, then it maybe goes all the way up here. I don't remember that it did this. Skims all the way up here, then comes all the way back down here. These are things can happen and sometimes do. That's just too much, So I have I try to follow the concept of first exit, meaning the first time you see that off ramp, like an inflection point, a level, an area where there might be a reaction, you take something off. So if you're only trading one lot, well, you're out. And you may want to ride it through and put up with that a little bit to get some more mileage out of it. That's fine. I do that. I've done that a lot. I do that still sometimes. But if you're in 2 lots, you want to, if you get a couple points, it really helps to take one off. Because in this case, you would have paid for your trade, and you could have let one run forever and had a free trade. You don't necessarily want to risk the overnight loan here, because at some point, if you come down through here, if the market were to have kept on going and give you heat, let's say your stop was here. Oh, you're stopped out, right? Well, let's say your stop is all the way down here. Well, let's see. That is from 64 to 57.5. That's like 6.5 points. That's a lot of risk, because by the time it gets down there, if it's probably going to keep going, or if it's coming down fast, like helter-skelter, okay? If it's helter-skeltering all the way down there, you might as well just hit out and get out of it, because they're probably going for this low. And why just let them take your money? You can always re-enter. Now, this is not to say that I'm a master of doing this, okay, at all. Because when you get in, all of a sudden you you want to be right. You want to put up with a little heat, hoping it's going to come back. You know, all of a sudden the whole circus of emotions start happening that I don't think if you're a human being, anybody's immune to. You get better at mastering it. You get better at not paying attention to it. You get better at being smarter. For example, saying like, okay, look, if it comes down below where it's 3 wide, I'm going to see if maybe it's going to react out there. I'm not just going to let it go down here, go a tick below, and stop me out, and then go back up. But if it keeps wanting to hammer down here on the order flow, you see it pressing, then maybe look, it's going to break. So let's just get out, and maybe we'll catch it back on. We'll get long again if we're still feeling long once we come back inside this overnight range. Or maybe at this point we're thinking, now they're going to go for yesterday's low, all that kind of thing. But once again, there's no reason to risk 6.5 points if you're only going to take a couple points. But if you're only risking a point or more, or a couple, points pretty hard to do in these markets because unless you're getting an extreme diametrically, what's the word I'm looking for? Asymmetric, not diametric. Asymmetric risk-reward situation. You're going to get shaken out all the time. So you give it a little room, but like you kind of watch how it's behaving. But you want to be careful because it could easily come back up and then hammer down. How often do we see that happen? All right, so I don't know why I'm kind of launching into a tangent of trade management, but maybe just adding value to the video for anybody who happens to watch it. So again, the rest after this big retracement. Again, you could call the day rotational. Certainly wasn't a trend day. We did have it one time framing up towards, coming into the last hour or last half an hour. But, we really didn't get up here and get any short covering from yesterday. Or, there's a lot here that could be taken back if you look at this. We never even took out really these swing highs in the overnight right here and right here. That more to come later, I try to be careful not to expect it to happen now or tomorrow, maybe next week, maybe 2 weeks from now. But like this is out there. This is kind of hanging out there, At some point I would expect a run up to take these kinds of things out, especially if the trend to the upside continues. So that's something to be have on your radar. Always look to the left of the chart. Ask me how I know. It's because many times I didn't, and then in hindsight I look back and I saw all this stuff, days before that was like outstanding. Where I see it's likely to go here, it's likely to go there, it's likely to be like a short covering rally that's happening and I don't even know it. All right, so that's today. Hope you got something out of this video. If you like it, please hit the like button. Let me know somebody's watched it. Appreciate that. And hope to see you again tomorrow. So have a great evening, and thank you very much.